In this analysis video, I'm going to discuss with you how I have collected my data, how I have combined all those to figure out what probably can happen today in non-farm payroll release and how we can trade non-farm payroll. So we will look into recently released data from the US, for which you can use any calendar, and if you go back in the calendar, you will find which data were released recently. You can go back, you can change your date if you have similar kind of calendar, or else you'll have to find a suitable or paid calendar where you can find previously released data. And if I talk about the recently released data from the US, there are three important data: manufacturing PMI, services PMI, and ADP, that is automatic data processing, non-farm payroll. So we'll look into all these things to understand whether or not the economy is good enough for creation of more non-farm employment. So today, these are the numbers. Here we go on the I will come to this later, and I will tell you why we are going to focus on average hourly earnings and unemployment rate. Sorry, not on unemployment rate. Why we are not going to focus on unemployment rate, and why we are going to focus on hourly earnings and non-farm payroll numbers. But before we go and discuss about this, we try to figure out what's actually has been happening recently according to the release data of the December. So manufacturing PMI and services PMI are released by two institutions. One is S&P, and another one is ISM, which is Institute of Supply Management. And recently released PMIs were from ISM, and we are not going to look at the PMIs because they are not going to give you exact uh, insight of employment. So we are going to dig into the breakdown of the PMIs, and we are going to look into the employment component. Most calendars do not show the components. They simply will show you the PMI, services PMI, manufacturing PMI, or composite. However, if we go to the ISM website, we can find the component. So here we are on the ISM. This is the ISM website, and we'll go to the reports. We click on ISM report, and here you will find the recently released reports. So I clicked on ISM report on business, and these are the recently released important data, and we are going to look at the employment component of manufacturing PMI and services PMI. If you click on view report, you'll be able to see it. So I'll simply go down to the employment component. So you can see in the heading it shows employment contracting. We will go to the one glance report. They show like this: manufacturing at a glance. So 48.1 to 45.3, it has contracted. And similarly, we go to services PMI, and we'll do the same thing. Employment index 51.4. Let's compare what was the index in the month of November. So we'll do the same thing. We'll go to the glance. Yeah, 51.5 in November, and this it was 51.4, slightly contracting. So employment component in both releases contracted, which is a negative sign, and that's why it's more likely that the non-farm payroll is probably, I mean, like I already said, more likely is not going to beat the expectation this time, because if this will beat, this will be the third consecutive time that the non-farm payroll will beat it, because it has already beat two times in the past, and this will be the third time. So it's more likely it's not going to beat these two things. uh, uh, and there is one more, ADP NFP was released recently, and the release data was less than forecast. So if we look at the employment components of the two PMIs and ADP, they are suggesting a dovish or or similar to expected non-farm payroll. Now I'm going to talk about why I'm not focusing on unemployment rate. In most releases, I have seen not a deviation more than 0.1%, which has not made any differences in the dollar index. Most difference was made by this number, which is of course the non-farm payroll number, and average hourly earning. This is really important. Hourly earnings is the thing which should rise to beat the inflation, and it is expected to rise by 0.3% in the, I mean, it is expected that it may have risen by 0.3% in December. So what is the dollar, what will be the hawkish and dovish scenario, or bullish or bearish scenario for dollar index? So let's say if it comes by, even if there is a 0.1% negative or positive deviation in the hourly earnings, it is significantly bullish or bearish. Here 25k deviation to either side will not be significantly bullish or bearish. So let's say if we want to understand a bullish dollar, we want to see this number to be at least more than 160k, and this to be 0.4%, or we want to see this at least more than 185k, and even if it comes similar, it is still bullish, not significantly, but it is still bullish. Now coming to the part of like neutral, so plus minus 25k here and the same number in the hourly earning will not make any significant difference. However, if it comes down to 0.2% and this come down by 25k, let's say less than 135k or 130k, then it is significantly bearish. If it remains the same like 0.3% and it comes to be less than 135k, then it will be bearish, not significantly bearish. So this is the observation, and we are going to see. You must have a quick data source so that you can see these numbers immediately after the release, and then the method to trade is something I can explain to you on the chart. But before I go to the chart, let me tell you about the I am on the chart now, but let me tell you about the instruments which I am going to choose in case of trading bearish dollar or bullish dollar. For bearish dollar, I will choose to buy Euro USD, and and also I will choose to sell USD JPY. So basically what I am doing here is I am diversifying between two currencies, Euro and Japanese yen, based on their recent price behavior. You can see that the USD JPY has not made any higher high in last and today, so last 3.5 days, and Euro USD didn't make any lower low since this date. January 2nd, excuse me. So these two currencies are relatively, if we look at all other instruments, are relatively better to trade against dollar in case of bearish USD. If USD is bullish, I wouldn't suggest you to sell your USD or buy USD JPY. Of course there will be fall in Euro USD and there will be rise in USD JPY. However, I would suggest you to go against gold for an hour or two. There will be a spike down, and since gold has already broken the previous high, there are chances of correction. You can see that the movement to the upside is slower. You can either understand this by looking at this oscillator, that the oscillator has made a slightly lower high here. So price made higher high, oscillator made lower high, which simply shows that the price is slowing down, speed to the upside is slowing down. And you can anyway understand, because sometimes we do not need indicators. Mostly indicators are like for children. I mean the guys who are trying to learn by the rules. So forget about the indicators, you simply can see this speed versus this speed. Second one is slower. That is why strong dollar will bring correction in gold. How to trade is totally about how fast your price feed is. So initial spike of initial uh, 20 second will be so fast, or 15 second will be so fast that if you click you will end up entering the trade at not very good price. So I suggest to go on a smaller time frame like 15 minutes or 5 minute, and if you see a spike down like this, you wait for immediate uh, upward retracement. Maybe it can be half of whatever it is, and you must remember to turn on your one click trading. So if you want to turn one click trading, you can press Ctrl O, and here in the trade you can select one click trading, and then you can press uh, Alt plus T, and the panel of quick trading will be displayed here, or you can simply press F9 and the panel will appear in the middle like this. Okay, so this is the method of news trading. Risky, but of course trading itself is risky, so there is no point of trying to be safer trader or riskier trader. It's all about the risk management. If you understand how much you are going to put on the risk on a particular news, so you can decide a certain number to put on every news. Anyway, coming to the point, so let's say we got a strong dollar, and then we get a spike down. It will not be such a small spike, it will be spike like this. It will be bigger spike, at least 1,000 points or more than that, because this is a normal price behavior of gold. This is normally how fast gold can move, even if there is no significant news from US economy. So 100 pips over 1,000 point is like it's nothing. So, and then you get a pullback to the upside, and by the time you'll have seen the number, it may have already happened. Let's say you have seen the number within 5 seconds or 10 seconds, and by that time this phenomenon already may have happened, and you will get this chance to open a position. Or else you can open multiple trades, like one at this retracement, another one at this one, another at this one. So these are the methods of entry. We are going to do the same thing in case of bearish dollar. We are going to buy Euro USD, and let's talk about the target. I mentioned two scenarios today: significantly bearish and bearish, significantly bullish and bullish. So if it is significantly bearish, then I can expect this high to be taken out. Or if it is not significantly bearish, it is just bearish, then you can expect at least 61.8 correction to the upside here. So what are these levels? I will show you. From here to this point, this is the 51%. I will just plot 0.618, which is 61.8%. so this will be the label 103.73, and this also coincides with two previous swing lows and highs, this swing high and this previous swing low, which has now turned to be a resistance. So this will be your target in case of bearish US dollar, and this will be your target, should be your target in case of significantly bearish US dollar. Let's come to USD JPY. How we are going to do here, I will take you to 4-hour time frame. These two lows are pretty near, and they are making a support zone which will be taken out in case of significantly bearish US dollar. So this area is something around 156.19, or something between 156.03 and 156.17. So it will certainly be broken in case of significantly bearish US dollar. You can expect price to penetrate below 156. So you can set your TP around 156.02. In case of not significantly bearish, just bearish US dollar, we can expect a correction, and the correction size will be similar to the recent swing sizes, and you can see a harmony in recent swing sizes. or it can be even bigger, but I will go for the smallest possible movement and I'll take it and I'll get out of the market. So these two are similar. These are a smaller retracement to the downside. However, I'm not expecting so small. At least this much can be expected, or even bigger, even in case of just bearish US dollar. So this will give you a target of something around 156.54. What is this number? Yeah, so 156.50 roughly should be the target. 156.52 is something you can set as the TP. So that's all in this video. I didn't tell you the target in gold, so let me tell you the target in gold in case of significantly bullish US dollar. In case of significantly bullish US dollar, you can expect a move bigger than any of these swings. So biggest swing here is this one. So significantly bullish US dollar will send the gold down to 2643, 2640 area roughly. As if it is simply bullish, not significantly bullish, it will still send it below this below this channel, and then your target should be something around. I will take you to the smallest swing. So even in case of no news, what we have seen by the price action, that the movement to the downside is this big. This is the smallest possible swing you can see inside this channel. This was slightly bigger, and these two were even bigger. So this a swing to the downside equal to this one can easily be expected. So it will send it to 2659. So that's all in this video. Thank you for watching.